All right, it is silver price forecast time. It's that time of the week where we take a look and take stock of what's been happening in the silver price so we can take and get a view of what we can expect for next week. Now, I want to lay a couple of disclaimers out because yesterday was a pretty rough day in the markets. And for me, I just kind of viewed it as just another one of those times of high volatility. We had a couple of catalysts here that brought silver to the downside pretty aggressively. And they both happened yesterday. So the first being is that we had stock options coming to an expiration as it was the third Friday of the month, which is considered a witching day. Remember, last month I talked about quadruple witching days where you have a whole bunch of asset options that come into expiration. And when that happens, it causes a lot of volatility. When a lot of volatility enters the market, there's a lot of bidding up of the dollar, and the dollar gains strength, which will be another point I bring up in this video. So we had a lot of volatility coming in from stock option contracts ending, bidding up the dollar. But then we also had another bout of volatility coming in from missed positive expectations from the consumer sentiment index, where people were expecting the trend to continue to rise in a positive way. Yet the consumer sentiment index from the University of Michigan actually went the opposite way, but it didn't just go the opposite way. It went the opposite way pretty aggressively. And this is a preliminary reading. So those two catalysts were pretty negative for the market as a whole, and particularly the stock market. And when that happens, there's a lot of volatility that occurs. And again, there's bidding up of the dollar that occurs. And when we bid up the dollar, obviously we know that that is a negative for our metal friends here. So I want to lay that as a foundation for what we're going to be talking about today, because though we did have a pretty down day yesterday, a pretty dramatic down day yesterday, I think that we need to see how the next couple of days play out, Monday, Tuesday, Wednesday, as far as the direction is concerned. Because yesterday, I believe, was one of the first days where we had a sea change as far as the direction is concerned. And if we continue to see that direction develop to the downside, then I can firmly say that things are looking somewhat in the near term bearish on silver. But in the short term, I don't want to give that call yet, mainly because there are a couple of strong catalysts that were external to the silver price that I want to see if they fizzle out or not next week. So let's take a look at some of the technicals here. So obviously we have a trend line and it was going to the downside, but in the last, basically on Wednesday, we had a nice green day. On Thursday, we got above that trend line. So that was a good positive sign. And on that same day, we opened above that trend line and we went up a bit, but obviously we came crashing down, especially after 10 o'clock with the consumer sentiment index being released around that time, basically continuing that downward trend. And if we take a look at the Bollinger Bands, we see the bands beginning to widen again. Remember yesterday I said that they were starting to thin out, basically cutting that volatility, but now they're starting to expand a bit more and we're starting to see the volatility rise. And unfortunately it's rising, giving the opportunity for silver to move up or down. That opportunity is being taken by silver to go down. So at least that is what this big red candlestick is showing. So unfortunately, yesterday we did have a pretty strong rise in the VIX, and it was about a rise of close to about 10%. And it was a pretty strong aggressive move that happened. And because of that, we saw, and once this shows, we saw a rise in the dollar. As you can see, we got up to 92.71, pretty close to 93, and we haven't been as high as 93 since about April of this year. So the dollar is getting bid up because of everything that we saw, particularly yesterday. Now, we're going to take a look at some moving averages here. And obviously, you know that I like to use the 20, 60, and 250-day moving averages because in my view, it closely matches the price action that a lot of money managers, or should I say money managers, portfolio managers, it matches those time horizons that they take a look at. They have monthly time horizons, quarterly time horizons, and then of course you have the annual run here represented by the 250-day moving average, give or take some days. Now, with that, as you can see, the blue line is the nearer term moving average, and it's already crossed below the 60-day. And it's getting dangerously close now to that 250-day moving average. And as we know, once the shorter term crosses below the longer term, that will spell a death cross. Now you may say, well, what about the 50, 100, and 200-day? So we can do the same thing. Take a look at the 50, 100, and 200-day. And I will say generally that there is going to be some difference, but the sentiment will still hold the same, though it may not be as aggressive. So we have the 50 to 100, and here's the 200-day. And here, we don't have the 50-day, the nearer term, crossing below the 100-day, which is good. But we have the price action, the candlesticks riding that 100-day to the downside. So both in the nearer term, which is the blue line, and the intermediate term, they're moving down to the downside where the 250 is moving up. So longer term, things look good. In the shorter term, things don't look too good with the moving averages. So basically, the story is, if we were to just look at moving averages, then things will look pretty bearish. But if we just take a look at the moving averages in context to this pattern here, we have a head and shoulders pattern. We have the left hand side over here, we have the head there, and then we have the right hand side over here. And we have that pretty strong red candlestick. So if we're just taking a look at technical analysis on silver, then this wouldn't look too good. But again, I don't want to say that because we had a couple of strong catalysts. This was the witching day from the stock options and also the consumer sentiment index. Back here, we had quadruple witching days as well, bringing the silver price down pretty aggressively. So we had these witching days that were just kind of, bringing silver down, unfortunately. Now, for me, what does that mean? Well, as far as my silver strategy is concerned, and I don't think I've talked about this much yet this year, I've actually kind of like revised it a bit recently because as far as my view, and I kind of want to give you guys a view of how I look at things. I'm a millennial, so I'm trying to build up my my assets for the future. And right now I don't own a home, and I like to own a home. So I'm saving up money for that. I'm putting money into my savings account, which is what I view as gold and silver, because it actually has a return, whereas most normal savings accounts don't. I view gold and silver as a nice savings account, again, because of the low volatility over a long period of time and the nice returns that you get by accepting that low volatility. And I also have an investment portfolio where I basically just buy the S&P essentially. And then I also just have an emergency fund. So I basically split up money, and I split up cash, and then I just spread it amongst all these things. So the emergency fund is for those like nearer term expenses that just kind of pop up. The savings account is just for, you can kind of look at it in the same way that you might look at it as an investment portfolio, but it's just lower volatility. And then there's a down payment for a home, which eventually I would like to have because, you know, you essentially have to pay for living. And if you're just paying down rent month to month, yeah, it could be less than what you might be paying on a mortgage, depending on your situation. But you're still paying down a principal that'll go into your equity. So for me, I think that's a no brainer for myself. But that's just my view. So as far as silver is concerned, I am looking at spending at least this year, for the remainder of the year. Again, this is just my view. I have about 3,600 that sometime this year I would like to spread amongst gold and silver. And I might just do it in a 50-50 kind of way. So 1,800 might go to silver and another 1,800 might go to gold. So I actually might speed that up a bit if things start to look a little bit more soft in the price of silver. For gold, I might hold out because things look a little bit different, and I'll make another video today about the forecast or my forecast on gold. So let me know what you guys think about this in the comment section below.